Good afternoon. Time to wrap this up for January the 3rd, 2014. Man, time flies when you're having fun. Okay, a little brief recap on where we were today. We came in, we were buyers off the open. We like that. We had a 203, 205 buy, then 2. And we said we would sell failure to take out the overnight high. So the first, we did get a good long off in this area, really a mean green trade. Retest failure right here set up pretty nicely, and it yielded a small profit. But the trade that really set up for us was right here. Had a little triple top, very little volume on that bar. You were short at 8. And the market just started working its way down. Another retest failure here. Makes another new low. And you can see right here that each time we're making new lows. So as long as we're making new lows, we're not too interested in the long side. Market rallies up, another retest failure here. And the market makes a new low. Setback trade, makes a new low. Setback trade, makes a new low. And then finally the last one. Now this third setback trade that we have, you know, the bloom's off the rose. Our first 2 setback trades, we really like those. Those generally yield pretty good trading situations. But the third one is always questionable. So the market made it down. After lunch, we came in and said, as long as we don't take out 203, the market is a short. We talked about this trade right here and having to take out that low, and eventually it does. Another retest failure or setback trade here, and the market's coming down. So we're in support at 95, 97, and it's probably going to be an interesting trade in the morning. We have a lot of news coming tomorrow. Some of it can change the market's direction. We have a lot of news coming on Friday, the non-farm payroll one. So where are we on money? This is our F1 screen. This is our capital flow screen for those of you that are new. We've got a higher low and a higher high. That means we're still buyers long term, but we can sell failure to extend the range higher. So we can take opening weakness, maybe buy this 92 area, give or take a little bit, and see if we can trade back up. And if we can't get through 2003, we can get short. We do have news driving it. So long term, we're buyers. But short term, in the short term, if we don't extend the range higher tomorrow, we can trade from the short side. Looking at the F2 screen, what are we seeing? Definitely a B, and volume is now finally moving lower in the distribution, and you can see it right here. So we got a B pattern, and so this one tells us we're sellers. So we're conflicted. F1 says up, F2 says down, so we're down to the news. And we have a lot of news tomorrow. ADP, 220. That would be supportive for the indexes. Jobless claims, 300,000. That would be supportive for the indexes. Trade balance, nobody's going to pay any attention to, minus 42. Productivity revised, plus 2.6. Unit labor costs at 0.5%. Then ISM services, and the ISM numbers since before the 2012 presidential elections typically come in higher than forecast. It's a strong number at 57.8. Don't be surprised if this number comes in higher than forecast. Looking at after IM services, we have crude inventories and natural gas inventories. So this is going to be number 1. Jobless claims is going to be number 2, and ISM is going to be number 3. And if they are as forecast, they are supportive, and they would reinforce the buy idea. Friday's non-farm payroll number, they're looking at 220 plus. So that would be supportive. So right now, 203 is kind of an important number for us. Our first sell band, selling failure to take out 203, 205. Then the second one would be sell failure to take out 210, 211. On the buy side, I'm going to lower it a little bit because it's a B. We've got some pretty good support down here. So let's let them go for stops below 95. We'll make 93, 95, buy one. And then 90 plus or minus 1 for buy 2. Okay, looking at the note, we got it wrong today. I thought that the market had one short left in it, but if we didn't take out the overnight session low, we could play from the long side. It definitely did not have a short in it. And you can see right here, strong finish, but this one favors the sell side. So if we can't extend today's range to the upside and tomorrow's news is not forecast to be supportive, we can get short. Conversely, if we can't take out this 24, 28 area, we can get long. So this one says down, and you're going to see the F2 screen say higher, and that typically when they're out of sync, that yields a trading range. A little higher, a little lower, but the market does not break. Definitely have a double distribution higher. Definitely leans P with the two distributions, but we've got resistance up here in this 11, 12 area. Then we have resistance basically at 16, and then our 20 to 23. So selling failure to take out 11, 12 will be first trade, and then 15 to 19 will be sell 2. On the buy side, last rotate stopped at 6. I have a feeling that the overnight sessional high will hold. So we have this 3-4 area as support. We're at 8, so I'd like to buy closer to the buck, but 1 to 5 will be buy 1. And then 25 to 29 will be buy 2. Okay, looking at the 30-year, strong market. The knob spread expanded today, and you can see that by how we close. So where might resistance lie? We got a B period high at 4. We've got a Y period high at 9. So, and we're currently at 39 even. So selling failure to take out the buck to 04 would be 1 trade. Then 8 to 12 would be 2. On the buy side, pretty strong market. Once again, pretty clean break here. So 21, 25 will be buy 1. I'll lean against this high over here in this L period low. And then 17 to 13 will be buy 2. So I look for it to be a little bit higher in the overnight session, but not break out, be held in check. Tomorrow's news and Friday's news will keep the market from breaking out to the upside. Okay, taking a look at gold. Gold was kind of interesting. It was very quiet today. Again, when you look at everything that's going on around the world, and all of this coming in from different sources. It's actually pretty quiet out of Asia with all that's going on in Russia. No one knows what's going to happen with ISIS. If you listen to the English, Cameron, things are liable to get hot pretty quickly. If you listen to the United States, it's a manageable problem. Ukraine and Russia ceasefire has been declared to go into effect on Friday. China and Russia have signed the biggest gas pipeline deal in history. So just a lot of stuff going on. Libyan airliners, 12 of them are missing, cannot be accounted for. So we have this spill right here against 75, from 75, so the 73, 75, let them get stops above tonight's high. Looks reasonable. And then we have this spill up here from 80, so the 78 to 80 would be sell 2. On the buy side, I still like our 65, 63 area. And then 58 to 60. Okay, crude was interesting. It really took off and ran for obvious reasons. Yesterday's selling was for not so obvious reasons. Nancy. It was a high 63 to 65 or 58 to 60. It was a sell 73 to 75 or 78 to 80. Apologize for my writing. So let's go take a look at the F1 screen on crude oil. And you can see this is resistance right here that we traded to. So this 95, 75, 96 area is a pretty stout resistance. The next area of resistance will be right here, basically from what 96, 70 to maybe 97.50. So 95, say 75 to 96 would be our first little band of resistance, and then our second band of resistance will be up here. Pretty strong downtrend. One headline can rally this market. I know it's frustrating to people that live through trend days down when the long-term fundamentals are bullish, but on a day-to-day basis, fundamentals may or may not play. We had a lot of range today, if you look at that. We had a lot of range yesterday to the downside. So this contract can really move, and you cannot trade it without appropriate stops. And if you do trade it with without appropriate stops, you're going to get wiped out. I hate to tell you that. Gold and crude can end your trading account. Doesn't mean that you're through trading, but you're going to have to go back and replenish it. And it can do it on one trade and in one day. So we have 2 distributions up. The market stopped pretty much at resistance, right where the selling started before London opened up the other night. So we're at 31, so our 50 to 75 is sell 1. Then 96, 96 and a quarter is sell 2. On the buy side, we had several breakouts today. And so the last breakout took place in this 94, 93 and 68, so we'll make 75 to the buck by 1. And then we got a lot of stuff comes in this 25 to 50 area, so 25 to 50 would be by 2. So, as usual in gold and crude, we're one headline away from an explosive move. $95 is a very round number. Should bring in some short covering or a little bit of a bounce. And then the euro, which I think we'll probably have a full complement of players next week. I see no reason to be long the euro. Their economy is weakening. They can't defend themselves. If they start to get worried about Russia, where the dollar is going to come from to build up NATO, something's got to give. My guess is they'll be looking to the United States to do that. And boy, if I were looking to the United States to back me these days, I wouldn't hold my breath. The distrust that's been created by all the false starts and false signals and backing away right now. So Europe's got some hard decisions to make coming. So definitely lean B from a volume and a TPO standpoint. So we lowered it to 50-60 for cell 1. Like that, then 75 to 85 for cell 2. On the buy side, we like the 25 to 35 area. Because it's a B, I'm going to lower that to 20 to 30. And then we're back to our 31 plus or minus. So that's it for September the 3rd, 2014. We do live in interesting times, don't we? The chaos that is going on all around it really is very reminiscent to me of the 60s. Where people were getting assassinated. We were having riots regularly in the United States. People were getting shot by the policemen.